In this week's episode of the Stock Scores Market Minutes, I'm going to talk about the importance of process for identifying trading opportunities. I'll then do my regular weekly market analysis, and then finally, a look at the trade of the week on GERN, G-E-R-N. All right, let's get right into it. Process for profit. One of the common mistakes that traders make is focusing totally on the rules for when to buy, when to sell, that sort of thing. And it's great to have those rules, that's essential, but without good process to apply them, something repeatable, something methodic, the rules are going to break down. The process should be a step-by-step routine that you execute over and over again to identify opportunities before they have passed. You know, the rules don't do you any good if you find the day trade 10 minutes late or if you find the position trade a week late. Without focus and discipline, the process is going to fail. So it's not just having the process, you also have to do it and put it to work. It's important to keep the process simple, step by step, so that you can avoid emotion and error. And ultimately, it just comes down to executing your process for profit. All right, let's get into this week's analysis of the markets. Here is the S&P 500 30-day, 60-minute chart. What's most noteworthy is on Friday, we broke this little flag pattern. So we had an upward trend, we flagged, and then Friday morning we broke out of that and we closed on Friday at new all-time highs. And that is a good indication that the market is going to continue the long-term upward trend. And it's even more important because we have broken through those long-term highs. And therefore, there's really no resistance anymore. We went to resistance, we stalled there for a couple of weeks, and now we have broken through. That's a bullish signal for the market to continue higher. On to the Russell 2000, which is a good proxy for the small cap stocks. Those stocks that we tend to like to day trade or swing trade because they don't require as much capital. They are much more volatile. Well, they've been pretty dead for the last few months, but this week we have broken out of this pennant pattern, and with that break it should get some life back into those shares. Now it's pretty typical that they're quiet in the summer. We're getting to the end of the summer, so the timing is right. And so if you like to trade those stocks under $10, we're getting a signal from the market that they are coming alive again. Onto the TSX, well, there's no life here. The market seems to be very complacent, both buyers and sellers, nobody really wanting to take action. I think the focus is on what is going to happen with NAFTA and tariffs with the US and that sort of thing. And there's a real kind of a wait and see attitude with the Canadian market. And because of that, I would wait and see. If you look at the long-term chart, you can see that we've just been in this narrow sideways range for almost 2 months. And until we can break out of that range and get some volume again, I think generally market's neither a buy or a sell. It's kind of a long-term upward trend that's taking a pause. But the TSX Venture, which has been really a deplorable market for many months, came alive last week on the heels of the announcement that Canopy Growth, a cannabis company, had sold a stake to Constellation Brands, which is a big alcohol company, maker of Corona. And that sort of legitimizes that sector, and it also opens the door for more deals. And so you saw some life come back into those cannabis stocks, and it lifted the TSX Venture higher. Is it out of the woods yet? I wouldn't say so. It was oversold. It's now starting to press to break that long-term downward trend line. And again, timing is right because these stocks tend to be very quiet in the summer. Now that we're coming to the end of the summer, we're starting to see some life, and that should carry over into the fall. Treasury bonds, of course, this is our proxy for interest rates. They were up in the last few weeks. Bond prices are up in the last few weeks, which means interest rates are down, and we're holding support. We have had that support zone held for numerous times in the last 2 years, and it is held yet again, but the bias remains downward because we have these falling tops on the chart. And until we start to break that downward trend line, and we're getting close to it now, and having formed a rising bottom, all these expectations for rising interest rates starting to call into question a little bit. I don't think it's a certainty yet that the interest rates are going to stay low, but we are seeing some signs that at least there is a perhaps less desire to push interest rates higher. US dollar, perhaps because interest rates have fallen, the US dollar pulled back this week. But in the context of the upward trend, it is still in an upward trend. And therefore, I remain bullish of the US dollar. But anytime we see a sell-off week, we always worry that the trend line could be broken. So that's what we want to watch for. Does the trend line get broken? And if so, then we can get a little more bearish on the US dollar. Of course, that weakness in the US dollar helps gold. We talk about that week after week, and gold had a pretty good week. But in the context of the trend lines, on one hand, you've broken this very steep one, but on the other hand, the longer term downward trend line remains intact. So I think there is perhaps a trade here to trade a bounce back on these gold stocks that are heavily oversold, probably have a large short interest. You'll get people covering the shorts. You might get a 2 to 5 day pop out of gold and gold stocks, and for a swing trader, that's great. But until we get a break of the long-term downward trend line, until we get some rising bottoms built, I wouldn't take a long-term bullish view on gold. We can simply become a little bit more optimistic for the short term. Oil, we talked last week about its importance to hold its upward trend line. It had pulled back to it, and it did exactly that. It behaved exactly the way we want it to. When any market falls down to support in an upward trend, we expect it to bounce, and oil has bounced. And until it can build a falling top and break down through the upward trend line, I will remain bullish of oil. And finally, the fear chart. Well, really no fear. As you can see, we're back at low levels and probably still have more downside in the VIX, but this is always a good thing to keep an eye on, because when there are those corrective days or weeks in the market, this is a great thing to trade. There's no life here now, but that doesn't mean it can't change very quickly, and I always keep an eye on it. So my outlook for US stocks, bullish on both time frames. Canadian, bullish long-term, neutral short-term. Gold, bearish long-term still, but I've raised my rating from bearish short-term to neutral short-term because of that break of the steepest downward trend line. And oil remains bullish on both time frames. US stocks have broken out and closed at all-time highs, and that sets up for a continuation of the long-term upward trend. Canadian stocks suffer from investor complacency. The US dollar is pulled back this week, and that gives some support to gold, but both remain in their long-term trends. For US dollar, it is up. For gold, it is down. And oil has held the upward trend, perhaps helped a little bit by the weakness in the US dollar as well. And as I said, fear remains low. All right, so in terms of process, this is a stock that met my day trading strategy on Friday morning. And without good process, you could never have found this stock in time because it moved so quickly. So first of all, let's just look at the entry signal right there. You see the little pink dot on the 2-minute candle for GERN. Had a big spike in volume. Obviously, the market trading abnormally at the open. And I've got this methodic process that put this stock in front of me right from the open, actually. But until it triggered the action candle at, I believe, 9:38, 9:40, it hadn't given a signal to enter. Well, it did that at the pink dot, which was the 4th candle of the day. So that would be 9:32, 9:34, yeah, 9:38. And look at the rocket ship that it was. It moved up quickly higher. But again, good process also got out before the big collapse. Because one of the things I do when stocks get up over 10 RR is I trail with a stop loss order that is one line below the high that it's hit. So if it hits 13, you've got to stop at 12. Now, if it hits 12 or closes above 12, you have a stop at 11. And that locked in a good chunk of the profit before the sharp sell-off as everyone ran for the exit door at the same time. Instead of holding until the close, my process said, let's get out at plus 11. If I held until the close, that's plus 7. Pretty big difference on a $500 risk tolerance. That's a $2,000 difference there, all because good process, step-by-step, methodic, and that's how you make more money in the market. Well, hope you've enjoyed this video. If so, please click on the like button, subscribe to the channel, hit the alarm button. You'll get instant alerts anytime I upload a new video. Most importantly, trade well.